The rise of Bitcoin since 2020 has been nothing short of explosive, multiplying its price several times and capturing global attention. Its volatility is undeniable, but so es su capacidad para atraer a millones de inversores que ven en el una oportunidad única dentro de los mercados modernos. When Tesla invested $1.5 billion in Bitcoin in early 2021, the world understood that crypto was no longer a game for amateurs. Institutional investors had entered the room, and with them came a wave of credibility, speculation, and massive price swings. Bitcoin has already lived through dramatic rises and brutal crashes, including an infamous drop of 80% between 2017 and 2018, yet it keeps resurfacing with more strength, fueled by renewed interest and long-term believers. What makes Bitcoin fascinating is its speculative nature combined with an ideology of decentralization. For centuries, money has relied on central authorities like the Federal Reserve or the European Central Bank. Bitcoin broke that rule. It offered a currency, if we can call it that, with no government behind it and no institution controlling its supply. Instead, its value comes from one thing: trust. Trust from investors, trust from institutions, trust from millions of people who believe that digital scarcity has real financial weight. Its limited supply of 21 million coins is often compared to gold, earning it the nickname digital gold, although it lacks industrial use and depends entirely on confidence. The mechanics behind Bitcoin are equally disruptive. Blockchain technology acts as a public digital ledger where every transaction is verified by miners competing to solve cryptographic puzzles. This decentralized process consumes enormous amounts of electricity, comparable to the annual usage of entire nations, and that has led to environmental debates and concerns about long-term sustainability. Even so, blockchain has proven useful beyond cryptocurrencies, revolutionizing contracts, payments, and digital ownership. NFTs, for example, emerge from this technology, showing how digital assets can hold real monetary value. Investing in Bitcoin today means entering a battlefield of opportunity, risk, and constant change. Its price can skyrocket in hours and collapse in minutes. Tweets from influential figures like Elon Musk have historically shaken the market, demonstrating its vulnerability and emotional volatility. Big holders, known as whales, can move billions with a single transaction, further amplifying the chaos. For new investors, understanding this unpredictability is the first step. Bitcoin is not a stable income-generating asset. It does not pay dividends. It does not behave like a traditional safe haven. It is a bet on digital scarcity and collective trust. For someone looking to take their first steps, education is the most important weapon. Understanding how wallets work, the difference between custodial and non-custodial services, and how private keys must be protected is essential. A beginner should start by choosing a reliable exchange with strong security measures and regulatory oversight. Creating an account, completing identity verification, and enabling two-factor authentication are basic layers of protection. From there, the safest strategy is to invest small amounts at regular intervals, a method known as dollar-cost averaging. This helps reduce the emotional impact of volatility and avoids the common mistake of buying impulsively during market euphoria. Storage is another crucial decision. Leaving Bitcoin on an exchange exposes the investor to hacking risks, so learning to use a hardware wallet becomes an important milestone. These devices keep your private keys offline and drastically reduce the chance of theft. Researching market cycles, understanding fear and greed sentiment, and learning to stay calm during crashes are equally important. Bitcoin rewards patience but punishes impulsive decisions. It is a marathon, not a sprint. For long-term believers, volatility is not a threat but an opportunity to accumulate during dips. The biggest question remains whether Bitcoin will consolidate as a store of value or collapse like previous financial bubbles. Some investors see it as a hedge against inflation and currency devaluation, especially in times when governments print money aggressively. Others view it as a ticking time bomb with no intrinsic value. The truth is that nobody knows the future, and that uncertainty is part of what makes Bitcoin so compelling. Its destiny depends entirely on collective trust, technological resilience, and regulatory decisions around the world. Beginning in Bitcoin requires humility, discipline, and the understanding that risk is unavoidable. But for those who take the time to learn, protect their assets, and think long-term, Bitcoin can be a powerful tool in a modern investment strategy. The first step is knowledge. The second step is security. And the third step is patience, because in the world of crypto, fortunes are built not by speed but by conviction.